The super bubble has popped, so let's take a look at what is going on, what we can expect. A lot of news about the Fed meeting and all the Fed board members at the Jackson Hole meeting, putting their best foot forward in the fight against inflation, saying that they're going to bring inflation down at all costs and that it's higher for longer. Markets are down today because of the resolve coming out of the Fed, as well as this job openings topping 11.2 million in July, which was well above the estimates, and nearly double the available workers. So that's going to keep inflation pressure strong. That's going to give the Fed more resolve to fight. Same thing in the housing market. Home prices weakened in June, but we're still much higher than a year ago. So as long as the housing market remains strong, as long as the job market remains constrained and strong, the Fed is going to continue to fight, continue to work, and continue to get inflation down. Neel Kashkari came out and said that they were not, or he was not happy with the market's response to their FOMC meeting back in July, and that he was much happier with the market's response to the Jackson Hole speech. It only took Powell 8 minutes to talk the markets down darn near about 10%. So that's what we have to expect. The Fed is serious. They know that they have got to get inflation under control. They can't let it run rampant. And they realize it's not sticky now and not transitory. And one of the reasons is it's not just the lack of supply that is going to continue to create inflationary pressures. In other words, it's not just supply chains. It's not just the temporary stuff through COVID and all that. What's happening and what's going on? Number one, the labor market. So that's continuing to put pressure on employers. So they have to raise their prices, which is a good thing. People need to make more money. The other thing is goods and products from around the world are getting more and more expensive because of energy to ship those goods. Oil is back on the rise today. We'll take a look at that again. So these cheap gas prices were the only reason inflation was down a little bit in the last inflation report. If those gas prices and oil prices go back up again through the rest of this year, then that's going to be another big problem for the Fed and give them more ammunition to keep fighting and go for a 75 basis point rate hike at their next meeting in September. The other thing is manufacturers now realize that they can do less and make more. So they're cutting back, paring back, they're limiting supply to keep prices up. Automobile market is one area to look for that. And then you have the potential chip issues and things like that. A lot of the batteries and chips, the electric vehicle manufacturers, Ford, everybody, they're raising their prices because of the increased costs there. So there's still a lot of inflationary pressure out there in the retail sector, in commodities, in housing, that the Fed has got to keep fighting. Central banks around the world, I think it was Europe, Europe reported record high inflation again. I think it was, I can't remember what the report was. I saw it here a minute ago. See if we can find that. But here we go. UK inflation could top 22% as energy prices soar. So they're really feeling it in Europe. And as we've been talking about, this is a globalized macro economy. The one affects the all. So if you're feeling inflationary and recessionary pressures here in the United States or in Europe and Australia, Canada, wherever it is, it's going to affect the rest of the world because it's a globalized, connected world trading with each other. The other big risk right now, again, we've talked about this briefly, is the China-Taiwan situation. So Taiwan is starting to fight back, and they shot down a Chinese drone after the president of Taiwan warns of strong countermeasures. I'm not sure which president warned of that. Could be Taiwan. Fired warning shots at a Chinese drone, which buzzed an offshore inlet on Tuesday after President Tsai Ing-wen said she had ordered Taiwan's military to take strong countermeasures. So it's Taiwan standing up to China saying, we're coming after you, leave us alone. The United States is apparently shipping weapons over there, rockets, anti-ship, missiles, things like that. So anti-aircraft missiles, those types of things. So this situation could be heating up. And as we saw with the Russian invasion of Ukraine, if China and Taiwan go to war, that's going to obviously create serious pressure on the markets and a serious situation with the global economic situation that we're facing right now, and potentially more people getting involved, more countries getting involved, and then a full-blown escalation of World War III. So I'm not saying that's going to happen, I'm just saying those are the risks. When countries start invading and you got everybody fighting everybody, next thing you know, the whole world ends up at war. And hopefully nobody gets crazy and starts breaking out nukes. But these are very polarizing times globally, not just in the United States and European nations. This is a global situation that we're in right now, and a lot of tensions, a lot of pressures, and a lot of unsettling out there right now. But anyways, this is Bitcoin on the hourly. And as we've seen, just kind of ranging in this area over the last few days, taking these on the hourly, these level downs, kind of mimicking the bigger picture of these little bear flag levels down. This is just a mini bear flag here, setting up another one here, and the price just sold off there. Obviously, got longs getting triggered here, shorts getting triggered there. So that's probably a lot of what's going on there. If we look at it on the daily, the interesting thing is Bitcoin is finding support on the previous 2018 market, 2017, 2018 market high. So right now, still finding support there, and that big support level obviously is 19,000. If Bitcoin breaks below 19,000, then it's definitely going to be testing this previous low, and it's just working its way down, taking these previous levels out of support and consolidation. So right now, that next level is about 19.3, and then obviously if that breaks, then you're looking at 18.9, 19,000, and then down to ultimately test that 17.6 and see if that'll hold. And we've talked about before, if that breaks, then you're going to be down 15.5, 16,000, and it could just be these little levels of unwinding that the price continues to follow as it goes along. And a lot of people are calling for the bottom. Said the bottom's already in. Could be possible that 17.6 holds up, and this could be putting in more of a macro bottom for this range of the cycle that we're in. But if you get a big situation like a Chinese invasion of Taiwan, or if war breaks out there, markets are going to sell off. This is going to drop, and these, it'll probably bust right through that 17 level and get back down into this, 14, 12.5, 13, 14,000 level that we've been talking about. So that would be a catalyst that could do it. Probably won't stay there because a lot of people will be jumping in at that point. And then, that begs the question, should you buy here? And you've heard a lot of people say that what difference does it make if you buy at 20,000 if Bitcoin's ultimately going to go to 500,000 or 200,000 or whatever it is? Well, the big difference is you can buy twice as much. So obviously, if it drops to 10,000 or 15,000, you can buy a lot more than you can at 20,000. Now, if the price is at 25,000 and it's going up to 30,000, or if it's 20,000, it goes up to 25, and it looks like we're in a bull market, the Fed doesn't have to do anything, inflation's under control, recession fears are gone, and global conflict has resolved, we can go bull market back on again, which isn't going to happen anytime soon. Well, then it doesn't really matter if you're buying at 25,000 if the price is going to go to 100,000. But it does make a big difference buying lower right now before price hits 100, because you can buy a lot more. So that's just something to think about. And then here's the other question. So let's say you buy in these areas. A lot of people are telling you to buy right now. It's your last chance. And we've heard it's your last chance to get these prices all the way down. So what's your worst case scenario? Worst case scenario is the last two big, economic events that we've had were the pandemic, $4,000, and, the last bear market was about $3,000. So, if price gets down there, it will most certainly snap back to this level. So, if all bets are off and the market just is tanking and, Bitcoin's just, the value just isn't going to get back to where it was, which I don't believe that. I believe we have chances to get back to these, 40, 50,000 level. Once we get there, we'll see if 60 to 100,000 is realistic. But when you have the institutional investors, like BlackRock's clients or Blackstone's clients, and the other institutions getting into the game once the price settles and the bear market is over, then that can obviously drive the price exponentially. But right now, these institutions are not taking part in a lot of this. They're not buying at scale. They might dip their toe in here or there, but the mechanisms haven't been set up. The announcement was just made, so there's a lot of work to do before they start buying. And they're certainly not going to buy in a tightening cycle. They want to buy in more of an easing cycle when they know price can recover and start going up. So generally, though, I think this level here is a level that Bitcoin, if it did drop way down to lower levels, it could definitely get back to here and beyond. I feel very confident in 20, 10, 15,000 to the 20, 25,000 range. I think price can consolidate in there for a while. Don't know how low it will go. Again, there's a lot of factors out there that will affect that. As we know, Bitcoin and crypto are definitely joined at the hip with the markets. Ethereum's been continuing its march after the big ETH merge news, waiting on that event to happen. And, ETH will probably unwind and test some of these lower levels again, which could be an opportunity, depending on how you view Ethereum and what you think the use cases are. Again, we've been watching the VIX. Let's go on to we're on the daily on the VIX. Remember, when the VIX is high, markets are low. That's the time to buy. When the VIX is low, look out below. That means it's time to get out. VIX is on its way back up. So again, working more into a declining market. The dollar is continuing its trend. A lot of people calling this a double top. It's consolidating right now into what could potentially be a bull flag. So we'll have to watch that. See if the dollar continues to that 120 level that everybody's looking at. And oil making its move. It's still on the decline here. It was up a little bit today, dropped back down a little bit. So, will oil get back to that 120 to $130 a barrel price? We'll have to wait and see. A lot of that's going to depend on how the Saudis control the supply. They said they're going to be pulling back on production. So we'll see if they actually do that, or if they're just, posturing politically. So these are the things I'm looking at. I'll see you in the next video.